Does take us to our talk of the tape. You know where this is going, assessing Apple. Once the biggest and most important stock in this market. That was then. This is now. Now tells a very different story, doesn't it? Shares the worst performing in the group this year, so will tonight get the stock back on track? Let's ask our panel. Malcolm Ethridge of CIC Wealth, Bryn Talkington of Requisite Capital Management, and Joe Terranova of Virtus Investment Partners. Bryn and Joe, CNBC contributors. Good to see everybody here. Bryn, you get the ball first. What do you think about tonight?
I'll take the ball and run with it. You know, I think that a lot is priced into the stock here. So first of all, if you actually look at this chart technically over the last 1 year, as Joe could attest to, it's making lower highs and lower lows. But if you stretch out and go back to 2022, 172 is really strong support. I think that so much news is priced in. I think in addition, people can't forget this is the stickiest platform in the world, but I think that's going to continue to grow. I think there's low expectations. So I'm going to stick with Tim Cook and team and think that a lot of bad news is priced in and the stock's trying to make a bounce here off that long-term support at 172.
All right. So Bryn's on Team Tim, as in Tim Cook. The other two gentlemen on the program seem to be walking away from that table. Joe Terranova, sitting right next to me, just rebalanced his Joe T ETF, as most of you know, and we documented yesterday on Halftime. One of the big moves, if not the biggest, no more Apple. You sold it.
I did.
Tell our viewers why.
Based on technicals and based on revenue decline, based on the fact that if, in fact, revenue growth comes in negative 5% this quarter, that's the fifth quarter out of the last six that you've seen that type of decline. So I cannot remember a quarter where the expectations were so low for this stock. I want to cite a statistic which is absolutely remarkable. The percentage of analysts that have a buy rating on Apple relative to the other mega caps, 57%. 57% of the analysts have a buy rating on Apple. If you look at the Mag 5, let's put Tesla to the side. That's 38%. If you look at the other Mag 5, there's not one name where the buy percentage is lower than 85%. Amazon's at 97%. So the expectations are remarkably low. And I think, given those low expectations, what Apple's going to do tonight is follow the Meta and Alphabet playbook and use the capital allocation strategy, buybacks and dividends, to soften the blow.
Okay. Well, this is generally the quarter in which you get the capital allocation, dividend, buyback, et cetera. We made a couple of walls, Malcolm, and I'm going to show the headwinds first because it seems apropos to the questions that I'm going to ask you and the ones that Joe just answered for me here. Whether it's total revenues expected to decline 4.7% year over year. Joe said down 5 of the last 6 quarters. We're not used to that. Justice Department antitrust suit. China concerns, where China revenues are expected down 14%. Weaker iPhone sales. Remember, you can talk all you want about the services business of Apple. It is an iPhone company first and foremost. It accounts for half of the revenues of this company. Revenues there expected to fall 10% from a year ago. And then what some fear is going to be a weaker June guide. Now, I'm going to show you the tailwinds after I hear your answer, because you sold some of your position, too, almost a year ago. I think half of it. So you're moving in the opposite direction as well. Why?
So, yes and no, Scott. I'm glad you actually came to me after Bryn and Joe, because I think I sit somewhere in between both of them. I think expectations are extremely high for Apple today and extremely low simultaneously. They're high because the street is so excited for AI and so thirsty for AI. If they sprinkle a couple of breadcrumbs and tell us something they may be working into the iPhone 16, that probably will be enough to make shareholders say, I want to hang in there. But I think at the same time, my concern was that the stock had gotten overheated a year ago back in May, and I probably wasn't wrong. I sold around 174, and here we are today, somewhere in the same range. But I am starting to think, with analysts becoming as negative as they are, as Joe pointed out, I'm starting to think that this is probably setting up to be a great opportunity to buy into this name. Now, I'm not saying that anybody buying into this name should be expecting another 2007 moment where they go kick off a whole new wave of innovation tomorrow. But I do think that usually when sentiment shifts like that against these mega cap tech names specifically, that's usually when something great starts to happen in those companies, a la Amazon 2 years ago. So that's my thinking here. I'm really starting to have two competing thoughts at the same time. and I might want to be buying those shares back here,
What
depending on what happens after earnings tonight.